Welcome, everyone. Happy Wednesday. We are back with Angel University. My name is Angel, purely by coincidence. I am joined by our CEO and founder of AngelAi, Pavan Agarwal, and our guest of the week. Pavan, would you like to introduce our guest?
But it's no coincidence that Angel is not a human. She is an AI. But
The world
Nathan,
may never know.
but Nathan Budrow, am I saying that right, Nathan?
You know, I hear it pronounced so many different ways, but the way that my dad pronounced it was Budrow.
Okay, Nathan Budrow. How's your French, by the way, Nathan?
Not very good. Not very good at all.
But your dad was both, right? I mean, he was fluent in French.
No, my dad, just like me, it was just an
Okay.
inherited name. But
Okay.
yeah, I pronounce it like he did. So Budrow is how I say it.
All right. So Nathan runs our loan servicing department at SunWest and manages a massive portfolio. So I thought it was really interesting. I think a lot of originators, a lot of realtors don't really know what happens after the deal closes, but that is actually the most important because that's the flavor, the experience that customers have after the loan closes can be, if it's not, red carpet, Ritz-Carlton type of service, they're going to hold it against you, the originator. They're going to hold it against you, the realtor. So that's why I thought it'd be great to have a podcast where we have, in my opinion, the best servicer I've ever met. And I'm fortunate enough to be working for us and be part of our team to be on the podcast and just educate our audience a little bit about what is servicing, why is it important, and how does it potentially impact your relationships and your referral business. So with that said, and we did go into a little bit of your French heritage, Nathan. Let's first, before we get into into what the man does, let's first understand the man. So tell us a little bit about your upbringing and how did you end up in the mortgage business, and specifically how did you end up in loan servicing?
Sure. So I've been doing loan servicing since the late 90s. Not to date myself too much here, but my first job in any type of loan servicing was actually at a subprime mortgage company. And back in those days, they would hire part-time collectors to come in. So you would have your full-time collectors would work like 8 to 5. And then me and a bunch of buddies of mine, I was actually roommates with, we got a part-time job going in from 5 p.m. to 9 p.m. just to call people and collect payments. And that was my first introduction into doing any type of loan servicing at all at a subprime mortgage company. And I took to it like a duck to water. It was actually really natural for me to call people and collect mortgage payments from them. And I learned really early on that, the old adage that you collect, more flies with sugar than or vinegar or whatever the saying is. I learned really early on that if I was actually just nice to people and I kind of came in with the approach that, hey, I know that if you could pay this, you would, that I was actually a lot more successful than some of my coworkers that were coming in a little bit more aggressive. So that was something that I learned really early. Did that for about a year before I got a full-time job as a mortgage collector. Worked at another subprime company doing that for about 3 years. And then I actually left the mortgage industry and got into more unsecured loans. I know that you've heard of the company Cash Call. They were doing unsecured loans at very high interest rates. I did that for about 5 years, and that's actually where I got my feet wet getting into management. That was the first job that I had where I got promoted. I was a supervisor there, and then eventually became a department manager over an entire department doing collections with them. Spent about 5 years there, then went into auto finance. Went to a company called Wachovia, and they eventually got bought out by Wells Fargo. And so I was supervising a team of collectors collecting on auto loans. Was there for about 5 years, and then blessing in disguise, the best thing that ever happened to me. I got laid off from Wells Fargo. I was back in the labor market, and I found SunWest. And it really was, a blessing in disguise. I talk about it all the time, how sometimes you think the worst thing that's going to happen to you ends up being the best thing that ever happened to you. At the time that I got laid off from Wells Fargo, I was single, living in an apartment with a roommate, no kids, not making a ton of money. Found SunWest, was given an opportunity to come to SunWest initially just to oversee the collections department. My first job title with you guys was collections supervisor. And in the 11 years that I've worked for the company now, I was able to take on more and more, a bigger piece of the pie. Within 2 years of working with SunWest, I was overseeing the entire servicing department, and met my wife while I was working here, had all my kids while I was working here, have now owned 2 homes, both financed by SunWest. So my entire life has changed over the 11 years that I've worked for SunWest Mortgage, and it's really been an amazing journey. And I have SunWest and you, Pavan, to thank for a lot of that.
So not only are you working at SunWest, but you're also a customer of SunWest.
Well, I was. My mortgage is actually being serviced by another servicer now. I think
Okay.
because I was a member of management, we felt it was better to probably transfer my loan to another servicer. And so it was transferred at one point. But yeah, I was for a couple of years a customer of
Yeah.
SunWest as well.
Yeah, that's right. We've had this policy in place for quite some time where management level people are not allowed to be SunWest customers.
Yeah.
Yeah.
Which is a bummer, because SunWest is certainly a better mortgage servicer, and I know I'm biased in that opinion, but a much better servicer than my current mortgage servicer,
Yeah.
unfortunately.
Well, now you can compare notes. Now you can see what they're doing versus what we're doing. There we go.
I do quite often, actually, because believe it or not, there are some things I'm not happy with everything that my mortgage servicer does, but from time to time I get something from them in the mail or by email, or I have an interaction on the phone, and it gives me an idea, and I say both positive and negative, right? But more often than not, it's something like what happened during COVID when I tried to call and get some information, and I had to wait on hold for 6.5 hours to get somebody on the phone. And that's another way of looking at it and saying, okay, what could we be doing differently? We know that call volume is going to be higher during COVID. We know that there's going to be more customers that are trying to reach us. What could we be doing differently so that our customers don't have to wait 6.5 hours on the phone to reach us? And so you learn both ways.
So when we had those peak volumes in COVID, what was our wait times?
Our wait times definitely went up, especially initially in the beginning, because as you know, we've always emphasized the customer, and we've always tried to have the right staff in place so that we could answer calls within 30 seconds. And we saw initially, right when COVID hit in March of 2020, we weren't able to meet those targets initially, but we made some changes to our strategy to really try and reduce the wait times. At that time, we started doing cross training with different departments so we could have other teams coming in and jumping in and answering calls for us. We changed our IVR scripts to give the option for a customer to press a button and get a call back. And sometimes just giving that flexibility to a customer makes a big difference. Some customers still choose to wait, and we'd seen wait times during that period get up as high as 15 minutes in some cases. But if that was their choice, they would rather wait than to get a call back. At least we were giving them that choice. And so I was proud to say we never had call times that went up much higher than that, and that was something that we really took a lot of pride in.
Right. So 15 minutes versus 6.5 hours for the other guys.
Yeah.
And that didn't stay up that high for very long also, right? I think you had it back under control pretty quickly.
We did, and the cross training was a big part of that. We took the philosophy that we have other people in our servicing department that can be trained to handle these calls. There's no reason why we have to filter everything into the mortgage assistance department to do the forbearances. Let's train other people to handle that. And then another thing that we did is we started sending out preemptive notices to customers saying, if you've been impacted by COVID, here's the options that could be available to you. And all they had to do was click a button to get approved. And so that was something that made it easy for our customers. I think a lot of mortgage servicers, and I can speak from experience just from mine, is they were hesitant to give you the forbearance. They knew that it was an agency guideline, and they knew that it was something they had to do, but they didn't make it easy for you to do. And that's something that we did, is we made it easy. We said, hey, if you've been impacted, just click this button. You're going to get approved for the forbearance. We'll send all the paperwork to you. We didn't make them sign anything or jump through any hoops, and it really limited the number of people that needed to call us into our call center. So that made a big impact.
Right. And actually, at the end of the day, by taking that proactive approach, our delinquency stayed really, really low.
Mm-hmm. Oh, yeah.
Everyone who needed the forbearance took the forbearance, and then they came, as soon as it was all over with, they came right back on track.
Yeah, they did. And a couple of other things that we did, and I'll, just again, speaking from experience, is, the servicer that I had, you had to call them to get the forbearance. You had to wait 6.5 hours to get somebody on the phone. But then once you got the forbearance, they wouldn't let you make a payment on the website. You would go to make your payment. It's so, okay, I got the forbearance, I'm protected, but let me go make a payment. And it would say, I'm sorry, you can't pay because you're on a forbearance. They made you jump through all these hoops. Then you had to call and wait another 6 hours to get off the forbearance. It was really crazy, but we still allowed people to make payments during their forbearance period. We set up options where if they only wanted to pay towards their escrow account so that we would have enough money to pay their taxes and insurance, they could do that. And also we were monitoring so that if the forbearance was coming to an end, we were already doing an analysis on the options that may be available to them, whether it be a partial claim or a loan modification. And we were sending out the email to the customer 30 days before the forbearance expired to say, here's the options that are going to be available to you. Here's what your payment would look like if you take the modification. Here's what it'll look like if you take the partial claim, or click here if you need more time and they can get an extended forbearance. So it was all really easy for our customers to kind of move forward without having to call our call center.
Yeah, I remember our tech team built all that out. I remember reviewing that project and testing it out myself. It was really cool. It was so simple, just a couple of clicks, and the person's forbearance problems were resolved on the spot. And it was completely seamless. It was so clean that you could even do it from your mobile phone.
Yeah.
Receive the email, you click accept, and you're done. And
yeah, I mean, you did more than just review it. You inspired a lot of it. You were involved with a lot of those conversations when we were talking about what's the best way to do this, and a lot of those ideas came, directly from you. So we appreciated you kind of rolling your sleeves up and during that time and jumping in there and helping us out with that.
Well, it's all about, we want to make sure people don't lose their homes.
Mm-hmm.
Right. And if they don't lose their homes, guess what? That's a repeat client that's going to come back to us and come back to our origination partners.
Mm-hmm. Yeah, absolutely. And that's been our philosophy all along. You said something very early on when I first took over the servicing department as a whole. We had a meeting, and you used that analogy you just used a minute ago, which was the Ritz-Carlton red carpet, white glove service, and you kept using it in that meeting. And I really took a lot from that meeting, and we created a whole training plan, which we now call our red carpet training plan. So every employee that joins our servicing department, during their new hire training, they go through red carpet training. And that's one of the things that we emphasize is that, okay, listen, SunWest Mortgage, as of today, maybe doesn't have the same brand recognition that some of the other mortgage companies out there do, right? We don't have the Wells Fargo, the Bank of America brand recognition. So how do we stay relevant in the marketplace? How do we get our customers to continue to come back to us? We have to build loyalty, right? By rolling out that red carpet, making them feel like they're, the most important customer in the world. And then we have to build word of mouth brand marketing marketing so that they're telling their family, they're telling their friends. SunWest is a different type of mortgage company. They treat you different. Not only are they going to come back over and over again, but they're going to get their family and friends to sign up with us. And that's one of the ways that we are able to be so successful. And we teach all that to all of our servicing agents so that they understand, here's why we place such a high emphasis on this rolling out the red carpet, is because it keeps us all employed and successful and allows the company to continue to grow.
Yeah, I think that's the main reason we don't subservice. That's why we have only our staff or only our employees working on the families that we service, is because you cannot get that kind of culture and that kind of feeling of personal accountability from a subservicer. Their employees will always just see this as somebody else's problem.
Mm-hmm.
Okay. When we do it internally, and our staff is emotionally committed to every one of these families, and that comes across in the service that they provide.
Right. Yeah, and it's we've had so many people that work in our servicing department that have been with us for, over a decade. And a lot of our customers, they know them by name. And you see that in the reviews that we get. They say, "Oh, I called and I got to talk to Miracle again today. She's always a pleasure to talk to." Or a lot of the reviews we get, they'll say, "Every time I call, it's never a long wait time, and John picks right up and answers all my questions. They know us by name." And that's something that once you start building that relationship with your customer base, it goes a long way. Because I know that, not just speaking about mortgage servicing, but any company that I interact with, when you call, you never reach the same person twice. It's always a long wait. You're not quite sure that the answers you're going to receive are correct, right? And I think that our customers knowing that anytime they pick up the phone, they can call us and they're going to hear a familiar voice, it goes a long way in building that relationship and that trust.
Awesome. Now you mentioned red carpet, and that's got me all excited because I'm going to let you tell the audience about the new servicing system that we are close to rolling out.
Right. So we are rolling out a new servicing platform, which is going to be completely built in-house by our developers. For the last 11 years that I've worked here, we've been using a third-party servicing system, and we felt that it served its purpose, but we feel like we can do it better, and we want to really make a system that has all of the customizations and all of the bells and whistles that will allow us to service our customers in the best possible way. And so when we first started building the system, one of the questions that came up was, well, what should we call it? And we had a list of a dozen names of, we could call it this, we could call it that. And, that conversation that I had with you all those years ago kind of rang in the back of my mind. Let's call it red carpet. Let's roll out the red carpet for our customers. And so that's the name we landed on, is the red carpet servicing system. And we're very excited. It's in the works in the moment. And we're hoping to roll it out, within the next couple of months here.
Yeah, and the best part about it is all fully integrated in as an extension of AngelAi. So our customers can literally chat with the AI and get all their same answers. The same answers that they would talk to Nathan or John or Miracle, they can ask AngelAi and she'll give them the exact same answers. So that would really speed up things, be available 24/7. And in fact, actually, we already have customers today that have found AngelAi on our website and go in there and ask servicing questions, and they get their answers. So it's a lot of the capabilities are already in there. We just don't market it because I want to wait until the whole thing is ready and have the full formal announcement. But as it is, our customers are in the AngelAi today, our servicing customers, and getting immediate answers any time of day, 24/7. And what's also going to be amazing about it is they'll be able to make payments through the AI interface. They're going to say, here's my check and here's my payment, and that's it. So effectively, the instead of checked by phone, it's not checked by AI.
Right. And of course, we'll still have both options because some customers prefer to talk on the phone and other customers prefer to use an AI, and whatever's the most convenient thing for our customers is the one we want to make available. But this is just another option that, especially like you said, sometimes if the call volume spikes up, if you don't want to wait on the phone, Angel's right there, always ready and available. And that's one of the really exciting features, is that it's going to be able to take your payment from you or set you up on recurring auto payments or answer questions about past payments. It really can do anything that a servicing agent would do.
Yeah.
Another exciting feature of the new servicing system, and when customers are interacting with Angel, is that it's always going to be sort of reminding them about who the original loan officer was that originated the loan, and making them sort of the face of SunWest as well. So that way, although they're mostly interacting with servicing at this point, when the time comes that they're ready to either refinance or look to purchase a new home, that's always something that's part of the brand, is this was your original loan officer, this is their contact information. We already display that information on the monthly statement as sort of a reminder, so that there's still that relationship. But we feel it's important to kind of keep that up in the forefront, so that that it doesn't get lost in the shuffle after 5, 6, 7 years of servicing a loan.
So what's your what's your advice to a homeowner that maybe, just lost his job or got a pay cut or something and is struggling to make the payments? What do we do to help them?
So we have a variety of mortgage assistance options that are available to a customer, and they can reach out to us by any method that is convenient to them to let us know what their situation is and to see what they may qualify for. So, if the customer wants to call into our call center, we have people ready, trained, and available to answer those questions, or the customer can go directly to our website, and on swmc.com, there is a servicing portal there where they can get the mortgage assistance application. It's a very short application. We don't make you jump through any hoops. We just need to know what your situation is. What's the hardship, what caused you to fall behind. It'll ask you for some supporting documentation in some cases, and you can actually submit that application directly to our portal, and we will review it and go through the agency guidelines depending on what type of loan you have, and let you know what programs you may be available for or eligible for. Most customers that are impacted, whether it be a loss of a job or a change in their financial circumstances, natural disasters is a big one that we get. People that are impacted in different parts of the country by hurricanes, tornadoes, floods. We have programs available that will help you get back on track. So the first step is just to reach out and let us know that you've been impacted so that we can help you. We do actually do some outreach as well for specifically natural disaster. If we do get alerted by there's a national website that tells us, the FEMA website tells us areas that are impacted. And we do have a program already where we will reach out proactively to those customers if they were in that area. Not everybody is impacted, of course. When a hurricane goes through a town, it doesn't impact every house, but that doesn't mean that it didn't impact your job or something else that may cause a hardship. So we reach out just to see what we can do to help, and we give them the options right there in the email. So always, of course, staying in communication with us or reading the emails that we're sending to you is a good way to kind of see what you might be eligible for as well.
Yeah. And then what's unique about our loan servicing department is we don't have a collections department. We don't have collectors.
Yeah, well, that's the interesting thing is when I joined the company, like I said, my title was collections supervisor, but that has evolved over the years. We no longer have anybody with the job title collector or anybody with the job title collections supervisor. That sort of is a thing of the past. And really the philosophy behind that was that, we don't, first and foremost, if a customer is past due, our philosophy is if he's not making his payment, there must be a good reason for it. And our goal isn't to call them up and collect the payment. Our goal is to call up and find out, what happened and what put you in this position and what can we do to help. And at the end of the day, it's more about the customer than it is about the payment. And if by the end of the call we're able to receive all of the payments, that's great too. But ultimately, we just want to find out and diagnose the problem and offer assistance. So all of our servicing agents, their job title is loan servicing representative. And they are trained to do everything, whether it collect payments or offer assistance or just answer questions for customers.
Yeah, so that's a good point because, when I look at there's all these different Facebook groups out there about different mortgage loan origination Facebook groups. And I see a lot of lenders in there talking about how, oh yeah, we would never do a loan below 620 credit score because those loans are bad, whatever, so forth. And in my opinion, that's discriminatory.
Yep.
Because we take the full spectrum of loans, and I think it's just simply because they're frankly incompetent originators and incompetent servicers. And when you look at our delinquencies, is our less than 620 is about equal to our 620 to 640. And just because, a credit score is like trying to make a conclusion that based on a credit score, the loan will or will not perform, is you're taking, what's the analogy? You're taking a big hammer on.
Yeah.
I forget that there's an expression for this, right?
Yeah, I think the using the hatchet to instead of a scalpel, right?
Yeah,
You're
exactly.
cutting off a big chunk of them.
Exactly.
Yeah.
You can't just put everyone in one big category because there's a lot of people for good reason, they've had, disabilities or job losses or whatever. There's a lot of good reasons why the credit score can fall, but it doesn't mean that they love their home any less.
That's true. And as somebody that's worked in lots of different types of lending, like I talked about before with the auto finance and the unsecured loans and different types of loans that you get, mortgage is unique in one aspect, and it's that once somebody purchases a home, that becomes the most important thing, not just that they have to pay for, but really, other than their family, it's the most important thing in their life, right? That home, they purchase the home with the full intent of paying it. It's not like other types of debt where, somebody might take out a credit card or run up the credit card, they have no intention of paying for it, right? Or they take out an unsecured loan, they never pay for it. That was always their plan all along. And you see it in auto finance too. People, they get a car loan and they don't pay for it. They hide the car, they put it in the garage, they try and lock it away from the lender, right? But that's not the same with mortgage. I truly believe, and I know there were some bad loans made, prior to the crash in 2008, and there was certainly some shady practices by some lenders back then that put people in homes they couldn't afford. But I truly believe that the majority of people that get a mortgage loan, that they get into it with the best of intentions, that the reason they purchase this home is that's their dream, that's their family, that's their roof over their head. And if they could pay it, they would pay it. And so when we go into it with that approach, it really doesn't matter what your credit score is. We just want to find out, hey, at the time that we originated this loan, you could afford it. What's changed? And what can we do to help?
So with, inflation being high and people's incomes really haven't risen as much as inflation has, what pressures are you seeing on delinquencies in the portfolio?
Delinquencies have certainly gone up. I mean, they're not where they were 6-7 years ago. That there's more people that are facing hard times right now. But there's a solution to every problem, right? And so it's really just about being able to make that contact with the customer, having that dialogue with them to find out, what their situation is. And the agencies that we work with, they have such great programs that are available, so that if you did suffer a job loss, then there's a forbearance period where we can wait until you find a new job before you can have to make payments again, right? Or in some cases, a modification can lower your monthly payment, or a partial claim can put your delinquencies back on the back of your loan, so that we can allow you a fresh start to get caught up again. And so it's really just about communicating and having that conversation with the customer. We are seeing that more people are, having a harder time. And you hear about that all the time from customers that say, hey, in the past, I was able to make my mortgage payment and I still had lots of, disposable income left over. And now after I make my mortgage payment, that's it. I don't have much money beyond that. And so their worry is that if anything else was to change, that, they won't be able to make their mortgage payment in the future. And that's just a conversation we have to let them know that, if and when that happens, you need to reach out to us, because we do have programs available where we can help you with that.
Yeah. And how is that, like property values have gone up 20-30%. And then most states are not like California, where your property taxes are locked in at the time you purchase the house, right? So once you purchase a house in California, at that purchase price, your taxes don't go up again.
Well, they go up, but they just don't go up with the same rate that the value goes up.
Yes.
There's a cap on how much they can go up each year. Yeah.
Yes, exactly. So, but in other states, they don't have that cap. How you see that affecting, people's ability to continue to make their payments?
Believe it or not, that's not one of the more common issues that we run into when it comes to a customer's inability to make payments. From time to time, you will have a customer that's fallen past due on their taxes, and they require some assistance or a payment plan to get caught up on those. But that is not one of the more common things that we see. More often, we see loss of job, or a reduction in pay. They had to transition from one industry to another. And I know that's a major concern, moving forward, is, the middle class kind of feels, a little bit squeezed out, and like you were just talking about it with inflation, the wages are not going up at the same pace. And so that is something that, I'm hoping that, our government agencies and the agencies that, oversee and invest in these loans will take some of that into consideration, as we move forward, because it is a legitimate concern.
Yeah, during the credit crisis in 08, 09, the government came out with these programs that were amazing, which basically they got a grant from the federal government and they gave borrowers homeowners assistance, and it helped make some of the payments for them.
Mm-hmm.
I think just a little bit of that, you wouldn't have to, they don't need to budget as much money as they did in 08. I mean, a fraction of that would keep a bunch of borrowers afloat.
Yeah, and there are still several states that have state programs that are similar to that, like the Hardest Hit Fund,
Yes.
the HAF, where they do offer state assistance to customers that are impacted or have a hardship. And that's great. The states that participate in that, we participate 100% with all of them and work with them to get our customers the assistance that they need. But that is a help, but it only goes so far. And so ultimately we got to get the economy back on track so that our customers are not put into those positions in the first place. We want to see wages go up at the same rate as inflation, right? That's the end goal here.
Right. Exactly. So tell us a little bit about how does the Hardest Hit program work?
So if you are in a state, and each state has their own criteria, but if you are in a state that participates, and we would already have sent out a flyer to you. It's going to be part of your monthly statement. You'll receive a flyer from SunWest that says, here's the contact information and how you can reach out to the state. You actually call the state and apply directly with them, or you can do it on their website. And then what would happen is the state then reaches out to us. They send us a request for information once the borrower gives them the written authorization to do so. And we communicate directly with the state, and then the state will give approval. And sometimes it could be a forgivable loan. So if the state, for example, approves a customer for, let's just use a hypothetical number, $10,000 in assistance, as long as that customer stays in their home for a certain number of years, usually 5 years, that becomes a forgivable loan that they don't have to repay to the state. And the state will use that money to make either a full or partial payment for that customer for a certain period of time. So they'll send the money directly to us, the servicer, and we apply it to the mortgage loan to make sure that the customer is getting that benefit.
That's a huge benefit.
Yeah.
How many states roughly are participating in this?
You know what? I don't have the exact number in front of me. I think at last count, it was a pretty high number. It was, I think 28 states were participating in the program. So
Oh, that's awesome.
Yeah.
How about some of the big states like California, Texas, Florida?
Yeah, the big states were participants in the HHF, and it was all the states that were impacted the most by some of the things that we were seeing over the last decade or so. But that was originally it was a program that was rolled out originally by the Obama administration, and it used to be called HHF, but now it's the HAF. They've sort of transitioned. So some states have dropped off, other states have jumped on. So it's always evolving and changing every year.
New administration, they just renames.
Yeah, that way they can take credit for it, right?
Exactly. So what's your perspective on the economy? And what like, you're in the ground, you're talking to consumers all the time, right? You're talking to a lot of families, you're getting direct information from them. So it's like you're like the best sample as far as what's happening, in the labor force. What are consumers experiencing and feeling? And can you share some of that feedback? What you're hearing from consumers? And that's a great projection of which way the economy is headed.
Yeah, I mean, it really, I don't have much more to share other than what we just talked about. Of course, we do hear stories all the time. I will say this though, sometimes you can get jaded a little bit when you work in whether you want to call it collections or loan servicing, because you only get an opportunity to talk to a very small percentage of your customer base, right? The vast majority of our customers, we never talk to on the phone. The vast majority of them, they just make their payment faithfully every month. You never hear from them. Everything goes smoothly. So it's easy to get a little bit jaded by the small percentage of people. But yeah, you hear a lot of the same stories. You hear a lot of people that are losing their jobs, and the new jobs that they find don't pay as much. And they are thankful that they have a servicer that, that's there for them and has programs available to assist them. But it's a tough time right now for a lot of people. A lot of people are hurting. And so it's certainly something that, I'm always focused on and paying attention to. But, we're hoping to see there's a rainbow at the end, right? We've started to see inflation cooling a little bit over the last couple of months. And so I think that's encouraging. And hopefully we start to see rates going down. That's definitely going to be helpful as well, and especially for us. We start building our portfolio, originating more loans. So that's what I'm looking forward to.
Yeah. What's your prediction on inflation in the job market for the next 12 months?
I should be asking you that, Pavan. You're the one I always come to for those kind of questions. But
the magic 8 ball.
Exactly.
Yeah, but you talk to consumers more than I do. So that's why I'm asking you.
Yeah, no, I don't know that I have a prediction necessarily. I mean, I always like to be proactive and be prepared and keep my ear open to all the changing, developments, but I don't really I try not to make too many predictions or try and forecast, things that we don't know. So I don't know, but I feel like things are moving in the right direction. I really do. It's an election year right now, and we tend to see things sort of start to get a little bit rosier during an election year. But we never know what's going to happen after November. What administration is going to come in and how that's going to impact things as well. So, all I can do is be hopeful and hope for the best.
So bottom line is, based on your interaction with, tens of thousands of homeowners, you're feeling upbeat based on their feedback.
I do. I feel encouraged. I feel encouraged by just the fact that, although there are people that are hurting, we've been able to help people that are hurting. And every time it seems like things are insurmountable, there's always something new that comes in the form of whether it be government assistance, new assistance programs, CFPB regulations, things that are coming to help the consumer. And it does make our jobs easier because we can show our customers that we are willing to help.
All right, that's good news. That's a really positive way to wrap this up. So things are looking up, and interest rates will be back at 1% again, right, Nathan?
Hey, I can't wait.
All right, you heard it. Nathan's made the prediction.
So Nathan, before we let you go, as you know, the majority of our audience is on the other side of the transaction. So with your experience in servicing on the other side of things, what is something that you would like loan officers and or realtors, any tips that they could be giving consumers to have the best experience on the servicing side?
Yeah, I mean, really just kind of building that relationship and making sure that their customers know where to go and who to talk to. I get emails all the time from loan officers, and they say, this customer is asking me a question, this customer doesn't know what to do. And my number one piece of advice to them is, point them in our direction. Let us help them. That we're the experts at that. And, we have the website that they can go to, swmc.com. They have our call center that they can call, or they can just email us at customerservice@swmc.com. We have a team that monitors that email box around the clock. And unlike some mortgage servicers, we don't take very long to respond to these emails. Our goal is to respond to every single email on the same day that it's received. And so if a customer just emails us at customerservice@swmc.com, we're going to get an immediate response to them. And so make sure that you're pointing your customers into that direction and allow us to do our job. We have a team of individuals that I believe are the best in the industry, and we will always be there for your customers. And if there's anything else that that I can help with, feel free to reach out to me directly as well.
Yeah, I think what happens with a lot of loan officers and realtors is they're used to every other servicer, where they're afraid to hand their customer over to the servicing department because there's a six-hour wait and emails don't get answered for weeks. And that's why they feel this need to shepherd those transactions through, and that's why you get those emails directly. But it only takes one or two times for the loan officer or the realtor to experience it and say, okay, this is different. This is the way it should be.
Right. And I understand that apprehension. I mean, they're trying to go above and beyond to help that customer because they know that that's how they're going to get repeat business from that customer. And that's great, but we want them to feel comfortable that they can utilize us as a resource and that we're going to continue to build that relationship and keep the loan officer's name in the forefront and we will be we'll exceed every expectation if they allow us to do so.
Well, you heard it here. Nathan will exceed your expectations. Okay, that's a high bar, Nathan. All right. So, and then Nathan, what is your email address? If
Yeah, my email address is my name, nathan.budrow@swmc.com.
okay, there you go. You heard it from the man himself. So
Send him all your fan mail from today's episode.
So in the next 5 minutes, Nathan's going to get flooded with emails.
Yeah.
Everybody's going to email him, tell him how wonderful he is. Nathan.Budrow, nathan.budrow@swmc.com. Email him, tell him how wonderful he is and how absolutely dapper he's looking today for this podcast. With that said, thank you all. Cheers. Happy Wednesday. And we'll see you next week.
See you next week.